What will drive your results in the next year?
So, Sherry, we've gone and embarked on a process of really recalibrating and generating a portfolio which can produce gold at very low cost. We're amongst the lowest cost gold producers in the world. We're forecasting again 820 to 880,000 ounces in the next financial year at a cost of 850 to 900 Australian dollars per ounce. So that makes us a very, very low cost gold producer today.
You also experience the benefits of a weaker Aussie dollar, with the Aussie price of gold averaging a record high last year. You're now seeing the Aussie dollar rising. How's this going to affect your margins?
Sure. If you look at the last 5 years, our costs have come down by close to a quarter in Australian dollar terms, and that's a result of costs decreasing in Australia, but also the change in our portfolio. In US dollar terms, almost by half. So we have had a positive benefit from the currency impact, but still a quarter is very large, and we're $907. The Aussie dollar gold price is over 1,600 Australian dollars an ounce, so still making very healthy margins. We made $482 million in free cash flow last year, which we allocated a large portion to debt repayments. We repaid $325 million, and today announced that we've increased by 50% our dividends to 3 cents a share, fully franked, for Australian shareholders.
Jake, as much as the costs might be coming down, there are some cost areas that you pointed out are actually seeing some upward movement. What can you do to chip away even further at those costs?
So we're working very hard to improve our operational performance. Maintenance is an area which we see opportunity. We've repositioned our portfolio with the acquisition of the Ernest Henry economic interest, which is a very, very low cost and high cash generating asset. In the June quarter, we generated close to $48 million just from that asset. So on an annualized basis, it's $150 to $170 million. It's got a 10-year mine life. And the other thing we did was we sold our highest cost, shortest mine life asset last year, Pajingo. So that's how we're repositioning the portfolio, a lens of improving the quality of the portfolio and always looking at what value we're bringing to the transaction.
Jake, growth is hard to come by these days. We understand that you've been open to mergers and acquisitions in the past. We've put together a graphic that shows just how tightly combined the valuations are for some of the miners out there when it comes to the gold space. I mean, do you have a particular requirement or a particular idea, a vision of what a potential merger could look like for you?
Well, what we've said is that we are open to acquisitions, divestment, mergers, joint ventures, but we always are going to look at it through the lens of will it improve the quality of our portfolio? And by that we mean mine life and cost of production. And the other thing is, what is the value that we're bringing and creating for our shareholders? In the past, if you look at the period 2009 to 2012, the 5 largest gold producers ended up writing off $65 billion US dollars in impairments. So M&A has been an area which we've been very successful in and effective, but it's been on the basis of it being counter-cyclical, where you've had motivated counterparties who've been looking to deleverage. You've seen a quarter of Australia's gold production change hands in the last 5 years. I think that was a one-off opportunity. So we're really looking at the next 12 months as being an opportunity to demonstrate our profitability, generate lots of cash, and continue paying dividends to shareholders.
Given that you focus so much on expenditure, how about divesting some of your higher cost Edna May mine, for example?
Well, we keep on looking at opportunities. We want to be counter-cyclical in our investments, so we want to be buying when people are selling. We want to be selling when others are buying. We don't comment specifically on what we're doing with our portfolio, but you can be certain that all opportunities are being scrutinized.
We also know that you produce copper, and you just mentioned Ernest Henry, and we're seeing copper futures at the highest level on record in Shanghai trading. Your outlook for the red metal and your production?
we're very, very happy to have some copper exposure. It's helped us generate material amounts of cash flow from the Ernest Henry economic interest. We've been fortunate that since we acquired it some 12 months ago or 9 months ago, the copper price has gone up by some 25%. So we've been very fortunate in our timing, and it's been a terrific acquisition for us.